What's going on, guys? It's Andy here. Welcome back to Painfully Honest Advice. So in this video, I'm going to go ahead and break it down, share with you guys my top 6 stocks that are dividend focused that I'm going to be planning on investing in 2021. And I'm basically looking to go ahead and double my position in all 6 of these stocks. Now, here's the thing. I have a dividend-based portfolio. I have over $100,000 invested in the stock market. I'm going to go ahead and break it down, share with you guys why I plan to go ahead and double my investments in all 6 of these stocks and why I'm so bullish in every single one of these stocks. We're going to go ahead and look at my portfolio and see how much I have in each one of these stocks. Now, if you're new to this channel, I do focus on a dividend-based strategy. Basically, I invest in the stock market. I have dividend growth stocks that I primarily focus on. I have around 50 stocks at this point, but these are the 6 stocks that I'm very, very bullish on going into this following year. I like to go ahead and focus on this strategy because I make money in 2 separate ways. With the growth in each one of these stocks, I see a potential for the stock price to go up over time. Plus, I'm focused on dividends. So at the same time, while the stocks are growing, I'm getting paid to go ahead and hold these stocks in a form of a dividend. And that's nice because I can go ahead and keep the emotions out of investing and just focus on the income that these are going to go ahead and build me over time. Now, all I ask for all this transparency is if you don't mind just smashing that like button right down there. And guys, if you're new to this channel, don't forget to subscribe to the channel down below. But I'm not going to go ahead and waste any more time here. Let's go ahead and dig right into these stocks. I'm going to go ahead and jump on my computer, share with you guys the first stock and my reasoning behind it, which is going to be Apple. Now, here's the thing. With Apple, as far as the stock price goes, they're actually up 80% over the last 1 year. And then overall, in the last 5 years, they're up 324%. And Apple does pay out a dividend, guys. The dividend yield is actually 0.69. And if we go ahead and just look at how consistently Apple's been paying out their dividends, Apple has been paying out their dividends consistently for the last 9 years, and they've been growing their dividends by 10%. Now, the reason why I really like Apple and why I'm going to be doubling my position in this stock is because Apple has one of the strongest ecosystems. I mean, Apple is getting into the healthcare industry with the Apple Watch. They have an Apple credit card. They have all their other devices that we use on a day-to-day basis, like the Apple MacBook, the iPad, the iPhone. I mean, you can go on and on with the devices that they have, but the strongest thing that they have is their ecosystem. When they come out with a new product, everybody jumps right on top of it. I mean, Apple at this point is talking about coming out with an Apple Car by 2023 or 2024, which is going to be very, very interesting. And with the way Apple does things, I feel like Apple Car can probably go ahead and take on Tesla or some of the other cars out there that are going to be the most innovative cars in the market. And as far as my position in the stock, I currently have $9,335 as far as my overall value in the stock. And I'm going to be looking at doubling this or getting to right around $20,000 as far as my value in this current stock. Now, as far as the gains go, I'm up $2,165, or my overall total return in the stock is 54%. And as we can tell here, guys, as far as my earned dividends, I have $31 in earned dividends, and the overall market gain from the growth of the stock is $2,134. Now, I use Simply Safe Dividends as well, as far as just doing my research and seeing the dividend safety score of the stock. I personally do really like the site. I'm not affiliated with them, but I use it, so I want to go ahead and share it with you guys. Now, the dividend safety on the stock is a 99, so this stock's dividend is considered very, very safe. And we've already gone over this, but the dividend yield is 0.69%. As far as the dividend growth over the last year, it's 6%. But that's basically going to be the first stock that I'm looking at here, guys. I'm very, very bullish on Apple. Now, I'm going to go ahead and jump into the second stock here, and I'm going to go ahead and change sectors. I do like to go ahead and diversify in every single sector. So the next stock is actually going to be Store Capital. Now, Store Capital is actually considered a real estate investment trust. And the nice thing with real estate investment trust, especially if you're focused on a dividend growth strategy, is that they have to pay out 90% of their earnings back to their shareholders in a form of a dividend. So let's go ahead and dig into this stock. With this pandemic, the stock is still down. If we just look at the last 1 year, the stock is down about 21%. And then if we look at the last 5 years, the stock right before the pandemic, as far as the stock price, it was going up on a steady basis. And then we obviously took a hit, and now it's starting to go ahead and climb right back up. The stock is currently trading at $31 a share, but over the last 5 years, they're up 45%. Now here's the thing, if we go ahead and look at Store Capital's dividend, Store Capital has been paying out a dividend consistently for the last 5 years, even through this pandemic. So that's very strong. As far as the payout ratio goes, they're paying out about 79%. So they have a little ways to go there because they have to get to that 90%. So I do see that the payout ratio is going to go a little bit higher. But the nice thing that I really like about the stock is their dividend. Their dividend is 4.58%. And if we just look at my portfolio, currently my value in this is $2,281. I'm up as far as my gains go of $334 in the stock for 27%. Plus, if we go ahead and look at the earned dividends, I've earned $10.51 in dividends, or as far as the market gains go, $324. Now, if we look at Simply Safe dividends, they are giving the stock a dividend safety of a 50, and that's because of this pandemic. And as Store Capital starts collecting more and more rent, I do see that the dividend safety is going to go higher. And as far as their growth goes, they've been growing by an average of 6%. But this is going to be the second stock on the list. I'm going to go ahead and double my position at least in the next year in regards to the stock. But now let's go ahead and jump into the next stock, which is actually going to be Target. Now, Target has one of the best followings, and they actually have a very strong ecosystem as well. And when we look at the stock price, Target is actually trading at $162 per share right now. But if we look at the last 1 year, as far as the growth goes, Target has grown by 50% in the last 1 year. And then if we look at the last 5 years, they've grown by 126%. So as we can tell from this chart, this is a company that I just believe is going to keep on growing once we get through this pandemic. And as far as the dividends of this stock, guys, the dividends are very good because Target has been paying out the dividends for the last 52 years, and their dividend yield is 1.67%. And then if we look at the 5-year growth rate, they've been growing their dividends by 6.47%. Now, additionally, if we go ahead and look at my portfolio, I currently have $903 invested in Target. It's actually one of my newest positions, so I do plan on investing pretty heavily and at least doubling my position over the next year in the stock, if not more. My overall gains are $9.74. Like I said, I just invested in this company, or 1.34%. But if we look at the dividend safety score of the stock, Target has a 90 as far as their dividend safety goes. So I don't see this dividend going anywhere anytime soon. And if you look at the dividend growth, it's at 3%, and their dividend yield is 1.67%. But now just jumping into the fourth stock, this is going to be in the financial sector, and the financial sector has been hit very hard, but that's going to be JP Morgan Chase. Now here's the thing, I've actually worked in the financial industry for about 6 to 7 years, and JP Morgan is basically the most innovative bank out there as far as when it comes down to technology. Now, JP Morgan Chase is basically my bet in the financial industry, and I'm looking to go ahead and double my position in this company. Now, if we go ahead and pull up JP Morgan Chase, they're currently trading at $114 per share. In the last 1 year, because of the pandemic, the stock is still down, and they're down 11%. In the last 5 years, they're actually still up about 74%. But just looking at this chart, before the pandemic, the stock price was actually going up, and then obviously we took a hit, and now I see it climbing back. It's another stock that does pay out a dividend as well, and the dividend is currently 3.16%, and they've been consistently paying out their dividends for the last 10 years, and they're growing their dividend by a pretty aggressive pace at 16%. Now, in regards to my portfolio, I currently have $1,300 invested in the stock, so I'm going to go ahead and look at doubling down on that, and my overall growth is $209 roughly, or 37%. But another stock that I have some dividends paid out in, as well as $196 in market gains. Now, additionally, if we go ahead and look at JP Morgan's dividend safety, this is borderline safe. So their dividend safety score is a 60, which is not bad because, again, this was another sector that was hit. But the nice thing that I like is overall in the last 1 year, they've actually grown their dividends by 25%. So that's basically gonna be my bet in the financial sector. And now just jumping into the fifth stock, another one that's got a cult following and a great ecosystem, which is going to be in consumer staples, and that's going to be Costco. Now, Costco is a brand that I personally love, and I actually probably don't even know anybody that doesn't like Costco. At this point, I invest in Costco. This is another position that I'm going to go ahead and focus on doubling down on. But as far as the growth on this company actually has very good growth, and I love what I see with this company. Costco is currently trading at $378 per share. Overall, in the last 1 year, the stock price is up 25%. If we look at the last 5 years, this is exactly the type of chart that I like to go ahead and see. So they're up 146%. And if we look at the dividends, this company has a solid dividend growth as well. This company has been consistently paying out their dividends for the last 10 years, and their dividend yield is 0.74%, and they've been growing their dividends by 14.52%. Now, as far as my portfolio goes, my current value in Costco is $2,041. I have a total gain of $192 or 23%, and I do have dividends that are paid out in this company, as well as the market gain split is right there as well. Now, this is another company that's considered very high as far as their dividend safety scores. They have a dividend safety score of a 99, and they've been growing their dividends for the last 1 year by 11%, and their dividend yield is 0.74. So I see this company being able to really grow, and I do see the dividend growing as well. But now let's go ahead and jump into the sixth stock. The sixth stock on this list is gonna be NVDA. Now here's the thing, with NVDA, they've really taken the lion's share of the semiconductor industry. Basically, with NVIDIA, they focused on making chips for different industries. They're actually in the data center industry, they're in the gaming industry, they're in the AI technology, and they have multiple deals with multiple vehicles out there and multiple companies that they actually have chips in. Like Tesla, they actually just signed a deal with some other companies like GM and Ford. So I see this company being able to really grow, and they're the leader when it comes down to the semiconductor industry. So with NVIDIA, if we go ahead and look at their stock price, NVIDIA is currently trading at $531 per share. Plus, if we look at the last 1 year, this company has grown by 155% just in the last 1 year. So you would have more than doubled your money in this company. Plus, if we look at the last 5 years, this company has grown by 1,600%. That's nuts. I mean, they are literally taking over the semiconductor industry. Now, NVIDIA does pay out a dividend, so that's why I really like this strategy. They actually haven't grown their dividends in the last 1 year, but they have been paying out dividends consistently that I'll show you guys on Simply Safe Dividends. But as far as their dividend growth goes, they've been growing their dividends by 13.49%, and the dividend yield is very small because they're focused on the growth as opposed to the dividend, which is still okay because long term, I love the stock. Now, if we look at my portfolio with NVIDIA, my current value in NVIDIA is $3,171. I'm up 32% or $340 in this company. Obviously, the dividends are low, so I don't have that much gains in dividends, but the market gain is nice in the stock. But here's the thing, if we look at the dividend safety, this stock is considered very, very safe when it comes down to their dividend safety score, which is an 89. Plus, the stock has been growing their dividends by 5% over the last 1 year. And if we go ahead and just look at when NVIDIA started paying out their dividends, NVIDIA started paying out their dividends in 2012, and they've been consistently growing their dividends. So this company has grown their dividends every single year for the last 7 years since they started paying out dividends. So I see this company growing over time. I see them actually paying out their dividends over the next 25, 30 years. But guys, these are going to be the 6 stocks that I'm focused on investing in 2021 and basically doubling my position on. I'm very bullish in every single one of these stocks. Now, if you are new to investing and you want to go ahead and get some free stocks, I do have a couple affiliate links. If you want to go ahead and invest in dividends, I like to go ahead and invest in a dividend growth strategy with my M1 finance portfolio. Additionally, if you want to go ahead and get some free stocks and some free money, I do recommend Webull, which is actually offering 3 free stocks. But thank you guys for watching this video. If you're new to this channel, don't forget to subscribe to the channel down below, and don't forget to smash that like button. I hope you guys found this video informative. But thank you guys again. I'll see you guys at the next one.